Well, we've got more on today's Housing Finance Conference, this time around from the administration's angle. Our chief Washington correspondent, Peter Cook, standing by with Jeffrey Goldstein, the Treasury's undersecretary for domestic finance. Peter.
Carol, thanks very much. Appreciate it. And Undersecretary Goldstein, thank you very much for joining us here on Bloomberg.
Thank you.
No, you took part in the conference. You and I both did at Treasury just down the street. First of all, can I get your take on what we heard today from Bill Gross? He raised a few eyebrows with his idea of nationalizing Fannie and Freddie, essentially bringing this all into the government.
Look, the benefit of having a conference like this is we can get esteemed people like Bill Gross and a myriad of other opinions to try to figure out what is the best way forward. What is the role of government? First principles. What's the best way of achieving access and affordability? And what is the best transition from where we are today to that end state?
Do you think Bill Gross is in the minority on this? It didn't sound like a lot of people are rallying to the nationalization cry.
I think that the great majority of folks that we heard today thought that it was important to strike a balance between how the government is engaged and how to catalyze the private sector. Too high a percentage of mortgage finance today is getting done by the government, by the enterprises, Fannie and Freddie, and through FHA. So we need to try to find a way to mobilize private capital in a way that brings the over 90% number that we have today to a lesser number and does it sensibly and thoughtfully and doesn't put us back to where we were, which was a broken system.
Can you give us a better sense what that lesser number is? There were a lot of people talking about shrinking that government footprint. Are you all any closer to having a better sense of what that is?
No, as I said, I think the purpose of events like today and the outreach we've done, we received 300 comments in response to questions that we posed to the public. We are going to be doing outreach going forward, is to make sure that we have the benefit of the best thinking on this subject. I personally don't think that we're aiming for a particular percentage. We want to get the structure right. What was wrong before was that you had shareholders had the ability to benefit and taxpayers incurring the cost. That fundamental structure is in need of reform, and I think there was wide agreement on that point.
The idea is that Bill Gross talked about that the private sector, private capital is not going to flow into this marketplace anytime soon. Do you, at face value, do you think he's wrong on that?
I think that the private sector has played a significant role in housing finance previously, and I think that there is a great opportunity for the private sector to come back into the market, and I believe it will.
What about the process going forward, Mayor? You don't have to deliver a plan until January. We're going to see more of these summits. Walk us through what the next steps are.
We are going to do further outreach in Washington, but importantly out of Washington, to get people's opinions across those fundamental questions, meaning how do we achieve widely available mortgage credit? How do we get access and affordability right? How do we achieve that with financial stability ensured? And how do we ensure that with consumer protection of the sort that was passed through Dodd-Frank? And with those four principles, we want to go out and, again, seek the best thinking on this.
At the same time, we have taxpayers on the hook, nearly $150 billion injected into Fannie and Freddie so far. First of all, the ultimate price tag, CBO says it could be near $400 billion when all is said and done here. Are Americans ever going to see any of that money back?
I think it's really important to focus on where those losses arose. In particular, the losses that have occurred are ones that were pre-conservatorship. The Bush administration put these two entities into conservatorship, and the losses were incurred because underwriting standards deteriorated and portfolio purchases were made with low-quality securities. I think that there is an opportunity to get it right, and in fact, I think under conservatorship, the loan-to-value ratios have gone down, the FICO scores have gone up, underwriting standards have dramatically improved, and the credit quality of that portfolio is widely different than it was prior to the crisis.
All right, Undersecretary Goldstein, we've got to leave it there. Thanks very much for joining us. A busy day for you and for the Treasury Department.